Spencer, as the downturn in the housing market made Zillow more relevant, you have a ton of content on your site, people advising other people, you have the Q&A. Has the activity actually increased over the last year?
Activity's increased a lot, and part of that's been driven by the housing downturn, part of it by an increasing feature set. But our traffic was up about 57% in 2009 versus 2008. And market volatility benefits information providers. So a lot of our traffic growth has come because of the housing downturn.
So sometimes, now especially, owning is a lot more expensive than renting. And I know that Zillow recently entered the rental market. Was that out of necessity, or is that just a natural progression of the model?
It's natural progression. We always had rentals in our sites. I mean, it makes sense really to have for sale and rentals on the same website. In fact, when we launched rentals just last month, we became the first major real estate site to have for sale homes and for rent homes available in the same map and the same list to look at the same time. And about a quarter of all home shoppers now are looking for sale and for rent homes at the same time. So it's really quite a benefit to be able to look at them side by side.
So you grew up in New York. I know that you've lived in LA. How does Zillow approach these dense markets? It's got to be difficult. We have our niche sites like Bid on the City and City Habitats and whatnot. How does Zillow think about these cities?
It's hard. It's very hard, particularly with Zestimates, which is probably what Zillow is still best known for, these valuations on almost every home in the country. It's very hard to value Manhattan real estate, for example. I mean, it's hard for real estate agents or buyers to value it, no less for a computer algorithm, which is what Zillow is trying to do. So it's extremely difficult.
Now, is there a bright spot, geography of the U.S.? Is there any place where housing market is actually booming or doing better than, say, Detroit?
Yeah, not quite booming, but Zillow's data shows that Boston and L.A. have actually already bottomed. So now it may be a very long, slow climb off that bottom, but we think the worst is behind us in terms of home values in Boston and L.A. Not so much New York yet.
Right. So what are you estimating then for 2010 and beyond? What's the housing market look like?
So the numbers at the end of 2009 where home values were declining around 6% year over year, which was actually the lowest rate of decline since December 2007. So home values are still going down, but not nearly as much as they were a couple years ago. We still think there's another 10 or so percent drop coming downside nationwide. Now, nationwide is kind of not that interesting to any individual, but in terms of how we look at the data, that it's important. But some markets and some price ranges are already starting to come back. I think more importantly is it's going to be a very slow recovery from there. It's going to be 5 or more years of low single-digit appreciation rates. We should forget about the boom times. We're not going to return to that. It's going to be a long period of slow recovery.
So you say we still have 10% downside. When's the bottom coming?
Nationwide, we think the bottom is still about 9 to 12 months out, but again, some markets have already reached it.
Great, so we're looking at 2015 for back to normal levels?
Well, normal is a relative term. This may be normal.
This is true.
Yeah, in terms of returning to the peak, we think it's going to be quite a long time, 5 to 10 years before we return to the peak.
Great, thanks, Spencer.
Thank you.